Hi, my name is Alex CARLUCCI with Gustan Cho Associates. I want to talk today about closing costs for purchase transactions and closing costs for refinance transactions. First, let's go over purchase transactions. So, in Section A, the top part, you're going to have origination fee if there is one. Now, origination fee usually it's called a discount point. So with these low credit scores these days, you're getting some discount point charges, or if you want to buy your rate down, you're getting a discount charge. Now, if you just decide you want to buy the rate down, that's your choice to pay that fee. But if the rate doesn't come with a free rate and we have to charge you a discount, then that's a cost that bank's going to charge you. So if you didn't opt for buying your rate down, but the bank still has a discount for that rate because you have a low credit score, then that would be a charge that the bank's responsible for. The next line, you're going to have probably an underwriting fee. All banks have underwriting fees, not necessarily all, but most do. Some of our banks don't have any underwriting, or investors don't have any underwriting fees for veterans and FHA loans. But so you should expect an underwriting fee. It's pretty standard from from every bank out there having an underwriting fee. So the discount points is very unique. Don't expect those, but they could be there. And the underwriting fee, most of the time's there, but not always. And then the next section, you're going to have an appraisal fee, $400 to $550. Now the bank you choose is responsible for picking the appraisal company, but they don't make any money off that. That's not a charge that the bank's charging. In fact, the only things that the bank's responsible for in this transaction is the top section A, the discount points, the underwriting fee, and then your interest rate. Those are the only three things that are going to differ from lender to lender on a purchase contract. All the other fees are third-party charges, and they are what they are. Now again, with the appraisal fee, the bank you go with, it picks the appraisal management company. So if they picked a cheaper one, maybe you could save 25 or 30 bucks per appraisal, but again, that's peanuts compared to all the costs that go into this. And then in that same section with appraisal, you're probably going to have some small fees like a tax service fee, tax certification, verify what the tax bill is, and the flood cert. So there's some small fees, $8,500, that also would go in that section. Then you go down to the next section, is usually the title. Now, a title on a purchase has nothing to do with the bank. It's usually 99% of the time the seller side is picking the title company. Maybe it's 95% of the time. Sometimes the buyer side can pick it, and that would be your choice. You shop around for it. But when this happens, it is the title charges are what they're going to be. So they could be $2,000, $3,000, $4,000. They're all over the place. So there's a bunch of fees that go in there. They break down all these fees, but they're all going to add up to $2,000 to $4,000 roughly. So that's the title fees. The next section is probably going to be a year's worth of insurance. So you have to buy insurance for your house. If it's a condo, it's a little bit less. So you go out and shop for that, and you'll be charged 1 year of insurance. So the next section would probably be you having escrow accounts. So if you're escrowing your money for your tax and insurance, so let's say you're going FHA or VA, you have to have escrow. If you go conventional, you put down 20% down or more, you don't have to have this account, but these are costs. If you choose to escrow, you have to escrow. These are costs that you're due at closing, but these are generally not cost, and neither is the insurance. That's your insurance. That's not a cost that the bank's charging. So the escrow money is going into a savings account to pay your taxes and pay your insurance when the due dates come due next. So depending on the due dates of your taxes in your county, you might have to have 3 months of taxes, you might have to have 11 months of taxes. It just depends when the taxes are due, and they have to collect enough money to have it by that time that they're due. And then the insurance is always due the next year on the closing date, so you're going to have 3 months in your escrow account for insurance, and that could be, it depends on the taxes, depends on the insurance, what that number is going to be. Then you're going to probably have, your lawyer fee in the next section. So you have lawyer fees, could be $400, $300, $600. If you don't have a lawyer, you're not in a lawyer state, there won't be a lawyer fee. And then there's some states have tax stamps, or counties have stamps. They charge you a per dollar purchase price. So in Cook County, Illinois, it's $7.50 per every $1,000 you purchase. So on a $400,000 house, you're looking at somewhere around $3,000 just to pay the county. It's like a sales tax. So you got county tax, sales tax, stamps, and all that kind of stuff. And then the last thing you're probably going to run into is interest per day. So the interest per day is just the interest on your loan divided. They take out the principal, and they just charge you interest from the day you close to the end of the month. So really, that's just your mortgage payment. And that's not really a cost. That's your mortgage from the day you close to the end of the month. So that's how they account for those days, and that's what goes into it. So all these costs average range from $5,000 in some really inexpensive states to $15,000 to $17,000 in some very expensive states, depending on the time of year you close with those escrows. So there's a wide range of what goes into that, and especially if you got discount points, you get some big numbers up there. And those those costs, again, have nothing to do with the mortgage broker except for Section A, where there's discount points if there are, and the underwriting fee, and then the rate. The rate's not a cost, but those are the only three things that your mortgage banker has anything to do with. So when you're truly shopping, you should be shopping those three things: rate, discount points, or origination points, whatever they want to call them, and the underwriting fee. Those are the only things we have control of. So the rest of it is third-party charges, and it's going to be what's going to be wherever you go. So that's a purchase transaction. Now, closing costs on refinance are a lot less. Your title's not going to be $3 or $4 grand. It might be $700 or $800. Some states are pretty expensive, like Pennsylvania might be a little bit more. Florida is very expensive. But let's say that the title charges will be less than they would be for a purchase. You're going to have an appraisal fee if you don't get an appraisal waiver. You're not doing a streamline, and you're going to get title. You're going to get underwriting fee. So those are the three costs that'll go into your loan. And then you'll have the escrows, so whatever your tax escrow. So what you're going to get rid of is these large title fees. You're going to get rid of any tax stamps. You're going to get, unless you're changing the title of the person, like you're adding someone to the title, then you have to do some stamps again. You're going to get rid of the lawyer fees. So it's a lot cheaper to refinance than it is a purchase, but it's basically the same fees going in it, but they're a little bit reduced. They're a lot reduced. So it's more expensive to purchase a home when it comes to cost than it is refinancing. If you got any questions, I know this is complicated, give me a call anytime. I'll talk to you about it. 630-915-7550. Please subscribe. It helps us help you.